When we consider the legitimizing nature of this stablecoin vote specifically, and the fact that President Trump is going to have to sign stablecoin legislation into law, I wonder what the implication is here for that legitimacy for traditional financial institutions. We had a lot of big bank CEOs on earnings calls this week talking about how stablecoins could actually pose a risk to them in terms of competition for payments. Do they have something to fear here?
Let me say at the outset, the bill is going through. It went through because of President Trump's leadership. And as Secretary Bessent has highlighted, this is incredible innovation as the president wants the U.S. to be the crypto capital of the world, the digital asset of the world, and the fact that basically the stablecoin market is growing at a really almost an exponential pace, and the possibility is this can be a several trillion-dollar demand for U.S. assets is extraordinarily positive. And, when you have innovation like this and the U.S. is going to be the center of it, I can understand how people get nervous about it because it changes the way of doing business. But this is going to provide a regulatory framework that's going to keep the U.S. at the forefront of innovation, buttress the reserve currency, the dollar. I think it's fantastic legislation. And kudos to President Trump and Secretary Bessent for helping this thing get over the finish line.
Joe, we just had some reporting from the Financial Times hit that President Trump is preparing to open U.S. 401ks, the retirement market, in part to crypto investments. Knowing how famously volatile digital assets have been, cryptocurrencies have been, is there not some risk in that when we're talking about retirement investments specifically?
I mean, if you're setting up a 401k, like, for example, take the Trump accounts, for example, I mean, you're holding this asset over long periods of time. I mean, these aren't trading vehicles. Stocks themselves can be incredibly volatile. So, I mean, if it's for retirement, it's for long-term savings and wealth creation, then you want to give people the opportunity to diversify their asset flow in a way that meets their own needs. So I don't see a problem with any of it, actually.
Mr. Lavorgna, we want to pivot and talk about the Federal Reserve. I know that you agree with President Trump that the Fed should cut, but does this pressure campaign that we are seeing from the administration risk that it might not be credible to the markets when the Fed ultimately does cut rates?
Well, the market actually has rate cuts built in. It has had rate cuts built in for some time. Chair Powell and many of his colleagues have said many times, and you see it in their official forecasts, that the Fed funds rate is actually well above what they consider neutral, which means monetary policy is tight. And if you look at the 10-year note, the 10-year yield essentially has been trading below the Fed funds target for a couple to 3 years or thereabouts. So the market really is saying that inflation's not a problem. In fact, we can get to it. The inflation data has been great. So the market is expecting easing. So whenever the Fed eventually does ease, that seems to me clearly the next move. I don't see the market being disjointed in any way. And the president, as the president of the United States, has all the all the reason. If he wants to talk about anything he wants to talk about, he should go for it, and he is. So certainly people respect that. If it wants to be on the Fed, then so be it.
Well, the president has suggested that rates are currently 3 points too high. Just for clarity, where do you think the Fed funds rate should be?
All I could say is if you look at the Fed's forecast for where neutral is, there's a very wide range. Neutral is as low as about 2.5%. Maybe rates need to eventually perhaps go lower than that. So I don't think President Trump is off the mark. Just as an aside, if you remember back under President Trump's first term, he says the Fed should cut rates, and he was correct. The economy was doing very well. It grew almost 3% in his first 3 years, and of course the pandemic struck. And the Fed funds rate was sort of where President Trump is saying it should be. So the president certainly has the right to talk about monetary policy. It's very important, and he may not be off base on many of this.
Well, talking about monetary policy is one thing. Openly suggesting that the Fed chair is doing a poor job and therefore may may need to be replaced expediently is another, as we're hearing from others in the administration, like Bill Pulte, who, of course, is openly calling for the chair to resign. I just wonder here, Joe, if the ultimate goal is lower interest rates, that you want lower interest burden when it comes to the U.S. debt, lower mortgage rates for everyday Americans, if you don't see a risk here that there's actually an adverse effect, that, yes, we may see rates come down at the short end, but at the long end, because of a loss of credibility around keeping a lid on inflation, you actually see long end rates go up.
Yeah, I've never really believed that, because the Fed said it's data dependent, and the inflation data has been excellent essentially for 5 months in a row. I mean, people got all worried about the CPI, which basically came in line with expectations. Then we had a stellar producer price index and an import price report today. So if the Fed's following the data and inflation's going lower and they wind up cutting interest rates, I don't see how markets are going to be worried about that. In fact, if you look at where yields are, they're lower than where they started the year. And when a lot of the people who are worried about the market selling off because of credibility and things of that sort, these are many of the same folks who back in April said the U.S. was uninvestable. And yet we had Treasury data that came out today that showed essentially record inflow into the market with Treasury demand virtually at an all-time high. So these arguments, I don't think, hold up to really scrutiny into the facts.
Well, I'm glad that you brought up the data, because the retail sales data today showed that it was weaker among some sectors: furniture retailers, department stores, sporting goods stores. These are the sectors that tend to be more import heavy. I'm wondering, how do you explain consumers perhaps rotating away from those categories that have that high tariff exposure?
Yeah, I would not. Yeah, you have to be very careful with that. And people have done the same thing with the CPI data. Every month there's relative price change. There's seasonal adjustments in these numbers. They move around a lot. The vast majority of the retail sales categories went up. I'd be very careful to cherry pick a couple of sectors that have some relation to imports and then say, okay, this is the tariff. Because what we know is the import price data, prices from China year on year are actually lower. Well, obviously we have a big trade deficit with a record trade deficit. Prices year on year are lower for Chinese goods now than they were back when President Trump first instituted those tariffs. So we have to be very careful in looking at the data. It's clear, and it should be obvious to everyone, that the tariff effect has not shown up really at all, despite expectations that tariffs would be causing these massive price effects. They haven't happened, and yet, of course, we know the tariffs are working because we're generating record revenue. We may have $300 billion in Treasury revenue this year from tariffs. That's not the calendar year. That's not an unreasonable estimate.
And Joe, finally, before we let you go, I know you serve as counselor to Treasury Secretary Scott Bessent. I'm sure it's not news to you that Scott Bessent reportedly is on the short list for who could become the next Fed chair, in addition to others in the administration like Kevin Hassett of the National Economic Council. If the president asked you, is that a job you would want? Should we put you on the short list?
Secretary Bessent is tall. I'm short. The only list I'm on is the 5'8" list, 5'8" inches tall on a good day.